Ladies and gentlemen, welcome back to the High Performance Trader. I'm your host, Joshua Salvetti, and today in this video, we are breaking down week 3 of May 2025. And today in this video, we're going to be covering a lot, okay? We're going to be covering the importance of execution. We're going to be covering the importance of risk reward. See, we have 3 main jobs as a day trader. Number 1 is learning to spot opportunity. Okay, the market is filled with crazy unstructured price action, but the better you can spot opportunity, the more fruitful you're going to do. Okay, number 2 is learning to execute on that opportunity, and that is the importance of learning a simple approach, and that's what we're going to break down in this video. Number 3, most important part, your job as a day trader is managing capital. This means managing losses, and this means managing winners, okay? You cannot just manage winners. You cannot just manage losses. You have to learn how to manage both. So today in this video, we're going to cover all 3: how to spot opportunity, how to execute opportunity, and how to manage that money. Okay, so guys, before we go any further, if anybody wants more information, if you want to learn this approach, if you want deep detail, click that first link below. Okay, it's going to bring you directly to my website where I break down in a 5-minute document how to trade, how to spot my approach called the HPT cross. Okay, it's a very simple 3-step approach. See, clarity is king. I believe in being extremely clear in showing you guys exactly what you need to see so that your execution skills go through the roof. Okay, so if you want these high-level summaries, these data reports that we're going to go over today, all you have to do is punch your first name, last name, email in, and I will send you these on a weekly basis, completely for free. Okay, it's my intention to get you to become the absolute best trader you can become so that you can then join our team and we can build the best trading environment in the entire world. Okay, so that's my goal. I want you guys to become phenomenal traders. I want you to become assets. So click those links below and get involved. Okay, so the week we are talking about, week 3 of May 2025. And I tell you what, we're coming off an extremely challenging week last week, and this is the thing. This is what I love about trading. Trading is not about being green every single day. As a matter of fact, we are currently at a 55% win ratio for the month of May. But does that make me worry? Absolutely not. Look at the last 9 months of data, okay? When I started this exercise 9 months ago, my goal was to master one approach, okay? There will be no more strategy hopping. Therefore, I wanted to create an exercise that would cause me to master a simple approach. I wanted to trade it for a whole year, and then at the end of the year, look at the data. Okay? That's exactly what we're doing. We're currently at month number 9, and we are sitting at an 80% win ratio. Okay? That's out of 157 trades. 127 of them have been profitable for at least $1. Okay, now bring it back to the 3 main steps to becoming a profitable, consistent, confident day trader. Number 1 is identify opportunity. How do we do that? Well, we use our very simple 3-step approach where we watch open print or any critical level. We watch the 5 and the 20 EMA cross. Okay, this is displayed by the EMA cloud shifting from red to green or from green to red. Okay, very simple way to determine the shift in market conditions. Okay, then number 3 is the RBI GBI entry. Okay, so spot open print, spot the moving average cross, and spot the RBI GBI, and then you have just followed our simple 3-step approach that's going to land you in a winning trade 80% of the time. Okay, so this is our goal. If we can learn to spot the opportunity, we can then move to step 2, which is execution. Okay, this means no matter what, there's no hesitation, there's no reservation, there's only execution when you spot your edge, and that's what we're going to go over today in this lesson. Okay, so let's make our way down to the first trade of the week. So the first trade of the week was May 12th, and this was a loss. Okay, you can see we got a very large sell-off from the open. Price started to just mess around a little bit. We got a pullback into the EMA cloud right here, where we took the market short after this red candle wiped out this green candle. Now, there's one thing about this trade. Now, as far as the edge is concerned, yes, this does fall into the category of the HPT cross. But we were extremely extended from the 1 hour time frame. Okay? The 1 hour trend will always be your friend. Okay? If and when you get extended from that trend, you can expect there to be chop. Josh, how do we know we're extended? Well, you use the HPT indicator I use that plots the 1 hour trend on lower time frame. This way I always know where the 1 hour 9 lies. Okay? You can notice here we're more than what? $4 away from it. This was a very low probability setup. Now, once again, my 3-step approach was present, therefore I'm going to take it. So that was our first trade, and it was a loss. Our second trade that we cleared over 200% return on, literally later in the day, we trade this to the upside, okay? Look at this trade. Very simple, very beautiful. Now, what's one thing that we can notice here that's repeatable? Well, we get a moving average cross. We get a red bar that's ignored. We put our stop loss below it, and then we take the market long, targeting 580.54, targeting open print, more importantly, targeting the 1 hour trend. Okay? The 1 hour trend is like your guide. Say you're walking through the Amazon. Okay? You have all these very large leaves and trees and massive plants around you. You can't see anything. Your guide has a massive hatchet, and he's just whoosh, whoosh, whoosh. He's just ripping down plants so that you can see. That is the 1 hour trend. The 1 hour trend is going to direct you. It's going to show you which way you should be trading. Now, just because we're below it doesn't mean go short, right? In this scenario, you can see we're very extended from it. So the moving average principle, anything that's extended tends to close, okay? So we play into the moving average when we get very extended. That was a beautiful trade. Absolutely smoke show. 5/14/2025. This trade was phenomenal. Okay, let's break it down. One of the best parts about trading the HPT cross is that it keeps you from trading choppy market conditions. Okay, if and when my strategy is not presenting itself, I don't make a trade. I sit on my hands. I do nothing. Okay, and that's exactly what happened in the beginning of this day. We got massive chop. Price rallies up, rejects previous day high. We get the moving average cross. Okay, I'm getting ready for a short, but I get no entry. Okay, on the 5-minute time frame, there is no green bar that is ignored here. Then price rips up to open print, and we get this violent sell-off. Okay, do we chase violent sell-offs? No. We wait for price to come back into the moving average, and then for us to get a solid RBI or GBI. This is how we know that the trend is healthy. This is how we know that the trend is giving us opportunity. Now, if we don't get that, we still get opportunity. It's just to the other direction. That's exactly what happened here, right? We get this large sell-off. Buyers come in, red bar ignored, in long, because right after the RBI, the candle initiates the moving average cross. Okay, so you see here, red bar ignored, moving average cross, in long, stop below end of day. Beautiful trade here up into open print. Okay, so once again, just getting better at adapting to the conditions of the market. 5/16/2025. This was Friday. So price is just, messing around here off end of day, off PDH. Basic chop. And then we finally get a red bar here that got ignored, right? This candle was completely green, and we enter into the market long. Where does our stop go? Our stop goes less than 60 cents away, directly below the previous candle. What happens? We get stopped out of our trade. Do we walk away for the day? Absolutely not. Do we understand that there's going to be losses? Absolutely. As a matter of fact, I'm prepared for that. Okay, we know how to manage that. It's always one bar. Okay, we have the easiest system for managing risk reward. Okay, on my losers, I risk 1 bar. On my winners, I make 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 30, 40, over 30 candles we made on this trade, clearing over 100%, okay? Now, once again, it was the same exact trade, okay? Moving average cross, off a critical level, red bars ignored, in the market long, okay? So once again, one's going to work, one isn't, okay? The truth is, out of 100, 80 of them are going to work. And this is all you need to know, okay? Don't worry about getting that perfect trade. There's nothing I could have done that would have kept me out of this trade and put me in this trade, okay? I followed the exact same criteria. One worked, one didn't. But where our control comes in is the way we manage it, okay? Once again, managing your losses is key, but so is managing your winners. Until you get that proper profit coming in, you're not going to be able to outswim your losing trades, okay? So guys, I hope you like this video. You guys know how much I love the data reviews, okay? This is key. Make sure you hit those first links, get involved with a team that's going to push you to level up. High Performance Trader is growing. We're becoming very strong. We're building very valuable assets, and I want you to be one of them. So click those links below. I'll see you there.